afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar. All right, traders, this video is for Thursday, 11/20/08, and all I have to say is, boy, oh boy, has this bear been showing its ugly head. Listen, traders, the last video I left you with, I showed you a chart. I said there are 3 bottoms. I did research back to 1970 to show you that triple bottoms usually will hold, but this one will not. I showed you that it has not held the first triple bottom in 2008. It will not hold this one. I showed you head and shoulders patterns and parallel channels that we would drop down into. And what did the market do? It broke down like a bear should do. But that last video got me my fair share of traders that wrote into me and said, Oscar, this is the bottom. Oscar, don't you see this as a bounce? Oscar, this is the bull. And all I can say to you traders who somehow are still bullish is this. I think you need to put your glasses on and take a better look at these charts, traders. In fact, I'm going to help you out because right on the board right here, I've blown things up for you to show you the difference between a bull and bear market. Now let's take a look. Oh, I think this is probably representative of a bear. And here's how you can tell. It gets really easy. If the market starts all the way up here in the top right corner of your chart and goes all the way down to the bottom left, and of course we're watching TV, so it's the opposite when you're looking at the chart. But if it starts here and ends up down here, that is a bear market, traders. There's nothing else I can tell you. I don't know how to convince you guys to stop calling me to ask if this has any validity. This is dead. The bull is dead. Yes, we can rally, but these rallies need to be sold. Traders, I stood in front of the camera on July 12th last year and made a projection and the prediction that we would go to 1577 and then break into a bear. You can watch my YouTube video dated July 12th. We went to 1576 and have been in a bear ever since. And I have been fighting you bulls off and taking the emails. And I am here to say I don't want them anymore. How could you still be bullish? I don't get it. Okay, look, once again, bull market? No. Maybe you're not sure. Bear market? Yes. We are in a bear, traders. They hibernate. They live in a den or a cave. They have cubs, but they're not bulls. That's not how it works. So please, for you bull traders out there, I'm just trying to make light of this and try to make a point. Look at the charts and trade what you see. Forget about trading what you hope for. I'm actually slightly in disbelief that you'd even call a guy like me and go, Oscar, isn't that turning bullish? I mean, come on, how many of these videos will I have to do? I do think we will end up in a bull market someday. I was a very bullish trader last year. I'm not a bullish trader this year, and I hope to be a bullish trader again next year. But for now, traders, you know what? This guy is not going up anytime soon. So let's start concentrating on the downside. With that in mind, traders, I have a couple of charts I'd like to show you. I want to show you the chart that I've been showing to my Omniacs at the site for the last few days. It's also a chart that you've seen in the last video. And then I'm going to show you a couple of other charts. And very, very interesting what's happened here is that we have put in, of all things, another upright head and shoulders formation, which in a bear market is a bearish signal. So let's go to the charts, traders. Let me show you what I'm talking about. Okay, traders, the first chart you are looking at is the December daily S&P bar chart. What you are looking at here is a head and shoulders formation, which also produced a triple bottom. And I showed you this chart in my weekend roundup last video. The triple bottom failed to hold and we broke down through it. Then we went into a parallel channel, which turned out to turn into a tailspin. And then, interestingly enough, the market put in an inverted head and shoulders, which has now morphed into an upright head and shoulders and another parallel channel. And traders, we just broke down and we are all the way down here. Here is where we reside in the S&P. We are lower than the triple bottom. We are below the head and shoulders. We are still within the parallel, but certainly pointing lower. And we have a near-term target projection of 723 for the S&P. On the way down, you will likely see support around the 762 area and again maybe around 738, but 723 is our near-term target. 723. We also have projections as low as 688, but not today, of course. I'm not a nut, but I do think that we can get down to the 723 mark somewhere within this move. Now, traders, one thing I will show you on the next chart is there's always the possibility of a rally to test the middle of the head. I've done this lesson before. Then the break comes. So there could be some kind of a rally, and I'm not looking for one tomorrow, but if after tomorrow and the next few days, if there is some kind of a rally, it would probably stop cold in the middle of the head of this head and shoulders and head right back down for new lows. Now, traders, I'm going to blow up this little area for you on the next chart so you can see it a little more clearly. Okay, traders, this chart is the same thing that you just looked at. It is the S&P December daily bar chart. Here is that head and shoulders that is now in place. Believe it or not, there was one. If you circle this and circle this and circle this, we had an inverted head and shoulders. But oddly enough, it morphed into this one. 1, 2, 3. And it is now an upright head and shoulders. And we have broken down below it, traders. That gives us the projection down to 723, possibly 719. But 723 is this spot right here. And that's where we think we can get down to. If you look at the parallel that this market is in, it'll actually hit 723 at the bottom of the parallel. That is interesting. Our target based on a head and shoulders formation, which has nothing to do with a parallel, comes in right where the parallel would hit the target. That is a very interesting bit of analysis, traders. I think we're going to get there. Look for the downside. Of course, on the way down, you will find support. But I do believe that we will head down. Okay, traders, now I'd like to show you another chart. The chart I'm going to show you next is the leader. I've told you in many videos and showed you in many lessons at my site at the Omni Trading Academy. We have shown you that the Dow Jones Transportation Average is the leader of the indices. Let's go look at what the leader has done. Remember, the follower is just at the bottom of its triple bottom, which is actually a quadruple bottom now, and just barely took it out, right? So if the leader is truly the leader of the indexes, it should be much lower than where we are in the S&P, right? The leader goes first. Let's go look at the leader now. Okay, traders, you are now looking at the Dow Jones Transportation Average daily bar chart. Once again, clearly defined upright head and shoulders. That is a bearish formation. The parallel channel that we've been trading, it hit it here, hit it here, hit it here, hit it here, hit it here. Just missed it up here and went and hit it down here as of today, Wednesday, 11/19. The important thing is, look at this. This was the bottom of the triple bottom. We're all the way down here now. The leader clearly led the way and has broken down all the way to the bottom of its channel. It will probably take that channel out. There is a nice size projection off of this inverted head and shoulders. If you'd like the projections for the Dow, for the transports, and for the S&P, simply come on down to our site. It's www.livewithoscar.com and allow us to teach you how to first identify these formations and then come up with projections. Okay, traders, let's look at one more chart here. Okay, traders, the next chart you're about to see is not one of these. It is a bear market. A bear market looks like this. It starts up here, traders. Ready? Up here it starts, and then it goes all the way down here. That, my friends, is a bear market. Please don't confuse it with the one that goes like this and send me a chart and ask me if it's bullish, because it's not. This is the Dow Jones Industrial Average chart. Head and shoulders here, big tailspin. Head and shoulders here, big tailspin expected. Do your homework, traders. Tell me if you don't see what I'm looking at here. I'm sure you will if you know how to spot the formations on the chart. Again, if you would like help with that, come on and join us at the site. We'd be more than happy to educate you in the art of technical analysis. So, you see the charts, traders? You can see clearly that this market looks like it wants to break down further. Traders, I was brave enough to make this call in the face of the guys who need these, in the face of the guys who can't figure out that this is dead. I'm trying here, traders, I'm trying. Listen, you can clearly see in the charts I showed you, and if you look at any charts, you look at anything with 4 bottoms, because we're past the triple bottom, turned into a quadruple bottom. You see any chart with 4 bottoms, I guarantee you 99% of those charts broke down through those 4 bottoms. That is what we would expect. That is what happened. And we called a very, very, very nice trade at our site today. We talked about the S&P getting as low as 807 today, Wednesday. And you know where it went, traders? 804.5. We made that call when we were breaking from 850 down into the 840s. We called for 807. It got there. So traders, this thing is bearish and it's reaching its technical projections day after day. Come on down to the site. It's www.livewithoscar.com. Ask some of the traders in our live chat rooms if we have not been nailing this thing day after day, because the analysis has been killing. Traders, there is nothing like technical analysis. I am telling you, there is nothing on this planet that can give you a roadmap to trading and where a market will go like technical analysis will do for you. And that is what we are all about here at the Omni Trading Academy. We can't always get them right. And with that in mind, traders, you premium room guys with the bond trades, I know. Look, if it goes any higher and it hits your stops, so be it. Let those stops get hit, traders. We can't catch them all right. It should never get to your stop level, but if it does, do me a favor, don't tell me that you moved your stop. Let it get hit. If we get taken out, so be it. We'll come right back at them with the S&P, and we'll make some of that back. So, stick to the plan, traders. You know that is so important. That is most paramount, to stick to your plan. Come up with your plan the night before and stick to it no matter what. And that means for losses as well. So traders, I know where you're all with those bonds. I understand it well. All the best to you. I hope things go well. All right. Traders, I will not be here at my site for some of the day tomorrow. There's a big trade show in town here in Vegas. I've been invited to the trade show. I'm going to get to meet with a lot of pretty big honchos. I guess I won't tell you who they are today, but I'll mention some of the meetings that I had to you, possibly in the next video. And I'm excited to go. I'm going to get to see a whole lot of booths and a whole lot of people, and a lot of my fans are going to be there. So, hey, all right for the trade show tomorrow. You may have to get out of the trades, get in and out of the trades yourself. I've already sent Omnis out, the Omni recommendations. We are bearish S&P tomorrow. We are looking to sell this thing, and we're looking for it to get hit pretty good. Now, traders, one more thing I just want to go over with you very quickly, and that is this. There is always the possibility of a head and shoulders formation coming up on the chart like we have now. We have one in the S&P, which I just showed you, and it looks like this. We get a projection off of it. I'd be more than happy to show you how to get that projection, how I got to 723 if you come down to my site. More importantly, what will happen on many occasions here is that you sometimes break out of the bottom of an upright head and shoulders and run back up and test the middle of the head. It fails at the middle, and then you have a big short. So even if this market begins to rally, you sell it when it gets up here. You heard it from Uncle Oscar, baby. You sell it when it tests the middle of the head. I've shown you Omniacs many times how well that works. This is a great technique. Please use it if it happens. Don't fall in love with the upside traders. Whatever you do, don't trade alone especially. Make sure you come on down to the site. There are tons of us Omniacs there every day. The rooms are full. We are there doing analysis every day, trying to help each other get through these rough and tumble markets. Make sure you come on down. One last thing I'll bring up is we're getting close to the holiday week, traders. Next week, Thanksgiving here in the United States. We never, ever trade when it gets very close to a 3-day holiday weekend. This is a bad one. Half the exchanges are closed. Half a day on Wednesday. We're closed all day Thursday, and a lot of them are closed Friday. That's a biggie, traders. You should not trade during that week. Maybe Monday, maybe even a little dip on Tuesday, but probably not even. And then you're done until we get back from the holiday weekend. Traders, I have learned this over almost 27 years of trading. I have learned that trading near the holidays will chop you up. So don't do it. Listen to me. Believe me, not that I know everything, and I'm certainly no better than the rest of you guys. I do know how to read the charts, and I do know from experience not to trade around 3-day major holiday weekends. All right, traders, that's about all I'm going to do in this video. Again, remember, I might not be at the site for most of the day, but the recs are out there for you. I will be watching markets and staying in constant contact with the office. So, of course, I'll be with you, just not in front of the cameras. All right, traders, say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.